There is a 47.5% chance that when rate cuts are announced later this afternoon, the market goes up. At least that is what JP Morgan analysts have to say. Behind me here are the predictions from JP Morgan analysts in terms of how they think the market is going to react based on whatever the Fed decides to do today and what Jerome Powell decides to say in his speech. Now, according to those analysts, there is a 1% chance that the Fed actually hike rates. If that happens, they would expect the stock market to fall 2 to 4%. They believe that there is a 4% chance that the Fed keeps rates at the same level and the stock market would fall 1 to 2%. Now we're getting into likely scenarios. 40% chance that we get a 25 basis point cut, which is the cut that we're expecting. And then if Jerome Powell comes out and is hawkish, he says some things about, I'm worried about inflation. I'm not too worried about the labor market. We don't have to do that many cuts right now. He would expect the stock market to be flat to down a little bit. And then the 47.5% chance that Jerome Powell comes out after they cut by 25 basis points and says some dovish things like, hey, we're looking at potentially being able to do multiple rate cuts, or like, hey, inflation, we're not too worried about it. We're more worried about the labor market still. That would be positive. And then the stock market could gain a little bit to 1%. By the way, 50 basis points is half of a percentage point. And then finally, the last scenario, 7.5% chance that we get a 50 basis point cut, so a bigger cut than expected, and the stock market would lose 1.5% in that instance. Now, with all that in mind, I then went and I asked ChatGPT, hey, ChatGPT, how accurate do JP Morgan analysts tend to be with market reactions right after a rate cut? And it's right? Now, when it comes to predicting the tone of the commentary, they have a 40 to 60% chance. So they're about right half of the time. So we don't know at all. This doesn't help us at all, really, in which case, is it really the 47.5% dovish versus 40% hawkish? We'll see. I'd like for this number to be higher to feel much better about the dovish scenario. When it comes to predicting the immediate market reaction, they're 30 to 60% accurate, which isn't that. It's basically a coin toss also. And then predicting the medium term market reactions mixed once again. So, take of this whatever significance you want. It seems a bit up in the air, but still, I found it interesting that analysts at JP Morgan think that there is a little bit more of a higher likelihood scenario that rate cuts are announced and the market actually goes up.